Hey everyone, welcome back to Berlin Day Trades. In today's video, we're diving deep into Dogwifhat, one of the most talked about meme coins in the crypto space. We will cover WIF's market cap and historical performance, what open interest is and why it matters, long and short ratios and what they tell about trader sentiment, and about macro trends and technical analysis. So without any further ado, let's get started. Now, let's take a look into Dogwifhat. It has had a wild ride in the markets. In March 24, it has been capped around 4.7 billion, and over the summer and autumn, it declined down to 1 billion, respectively. Then, following Trump's election end of November, we saw a spike back to 4 billion, and since then, that move was aggressively sold off down to 1 billion market cap. Now, the big question is Dogwifhat worth entering at current price levels, or should we wait? Currently, Dogwifhat is sitting at rank 72 among cryptocurrencies with a market cap exceeding $1 billion. This makes it one of the strongest meme coins in the market, but also a highly speculative asset. So can we see new all-time highs or at least return to $2.50 or even $4 per share? To get some insights, let's analyze key trading metrics and start with open interest. To track market sentiment, I use coin Analysis, which provides on-chain data like open interest. I typically refer to the 4 hours chart to get a better understanding. But before I actually start to explain what we see in the charts, let's discuss what open interest actually is. Open interest basically measures the total number of outstanding contracts that haven't been closed or settled. It helps us to gauge market participation. A rising open interest means new money is entering the market, and obviously the opposite means money is going out of the market. So, for instance, when we look into January, beginning of January, we can clearly see that from 380 million, the open interest has been declined down to about 220, 230 million. So there has been a recent sell-off, but now we're seeing a sharp spike in open interest. So we can see from 215, it went up about 50% in about 4 hours. So it somewhat indicates that either whales have accumulated or just dummy retailers. You know what this might be. And you can also see now on where these trades have actually been executed. And the lion's share is on Binance and Bybit, resulting in about 270 million, 280 million. Including the others, we would end up at 312 million, which is quite significant. I guess this somewhat suggests that we have a strong momentum, which can indicate a breakout. But if the open interest remains flat at this price level where we are at the moment, this could signal that we could even trend lower. The next I would like to talk about is long-short ratio. Again, we're looking into the 4 hours chart, and before I again explain what we see here, I'm going to explain to you what this actually is. So the long-short ratios is basically just telling us how traders are positioned among the markets. So by selecting style, long and short percentages, we can then see how many trades have been positioned long and short. And even though the price is trending downwards, we have a pretty stable long positioning from holders. This could indicate, for instance, that most of the traders are just holding, not selling off, waiting for a price reversal. We can here see a short spike of shorts. That's probably because the price has just increased by 30%. So it's pretty natural that people who have entered at this price levels here may have sold off already. But generally, this kind of data shows us that a high long ratio means that most traders are currently betting on higher prices, which kind of indicates we are bullish. And furthermore, since we just saw recently a surge of about 300 million in the last 12 hours or so, this indicates there is an interesting opportunity. Now, If you think it is worth digging a little bit deeper, then let's take a look into the technical analysis. For now, I just present you the daily time frame. I will specifically look into the RSI and the cumulative data. Normally, we could also look into other indicators such as the EMA, the exponential moving averages, but I think in this point in time, this is not very helpful because price is just trending downwards and it's somewhat signaling if the price is below the moving averages that we are in a downtrend, right? So in that case, this type of strategy does not work, and that's also why I will not focus on these indicators. Instead, we rather look now into recent price action, and we can see, for instance, here on the 3rd of August, we can see this doji candle, which then has led to a significant price increase of about 80%. We see the similar pattern here, as a very similar pattern also on 6th of March. So you can somewhat say that the $1 mark is a significant resistance level for Dogwifhat and can indicate potential reversals. When we're looking now into the RSI is a relative strength index, which is a momentum indicator that measures whether an asset is overbought and oversold. So if this line chart is exceeding 70 70 is overbought, which kind of indicates a potential reversal to the downside, and anything below 30 indicates a momentum shift or a potential reversal to the upside. So you can see on Monday we had the sell-off, and since then the RSI has spiked up quite significantly. So this is actually something that where we could say, okay, this is bullish. Conservative traders or investors could wait for additional confirmation, but you can see, for instance, here in June 2022, it has been sold off and resulted in a nice rally. In August, we saw a nice rally to the upside. Actually, this started from $1 and ended up at $4.5. So you can see there is this 2x to 4x potential. Now, if you are an aggressive trader, you can take an early trade here with a tight stop loss in the case that RSI fails to sustain its recovery. Next, we may want to look into the cumulative data. And the cumulative data shows the net buying and selling activity over time. So since January, the monthly trend has been downwards, right? So you can see here, this is beginning of January. It starts at 0. Whenever a new month starts, it starts from 0. And then it's just measuring how many buyers and sellers they have occurred over time. So how many shares have been bought or sold. And since yesterday, however, you can see on the 28th of January, there was this doji candle. So there was a huge absorption going onward. And you can also see now that if this daily candle closes, then we would have an engulfing one-day candle. So this basically just means there were more buyers in the last 24 hours plus willing to enter this price level here, which again is a good indicator for the upside. Next, when we look into the volume, we can also see that even though the volume here is so high, the price did not go significantly lower, which is again signaling that buyers have absorbed selling pressure, and now we see this type of reversal. So next, let's maybe talk about what kind of support and resistance level we should look for. I've already marked it down here. This is the support level sitting at $1 down to $0.99. And the first resistance level is sitting at 2.3. The second level is sitting at around $3. And then we have the headroom at $4.5. So what could be a reasonable trading strategy? You could, for instance, buy now at a price of 130-ish. And if prices tend to go lower again, you again buy in at $1 or 95 cents, which is then averaging your price somewhere around here. And you could then hope or speculate that the price either goes to 2.5, $3 or beyond. What I highly recommend you to do by this strategy is if you, for instance, buy at now, and if price goes lower again at this level, that you partially take money out of the table. So maybe 30% here, 30% here, and the last 40% you just leave running to the end. So that's kind of the analysis for today for Dogwifhat. And the question now really is, should you buy now or wait for confirmation? Just drop your thoughts in the comments and let me know if you want to have any further information. Actually, we haven't really touched based a lot on how the Fed is going to impact the price trajectory, how Trump's presidency also can have an impact on the entire crypto market. These are all factors that you need to have on the radar if you want to have an informed investment decision. So, yeah, keen to hear more from you and see you soon. Bye for now.
Peace out.